Gaurav, thank you so much for joining me today.
Thank you, Lily, for inviting me.
As an investor, can you tell me where you see the best opportunities in 2026?
I think the US private placement market continues to provide us with value and term that we need for our various balance sheets. We are fairly adaptive, so we'll go wherever we see opportunities in terms of better relative spreads and duration. Uh, from a Canadian balance sheet perspective, we are hoping to do a lot more in Canada for Canadian infrastructure because it's very capital efficient. The regulators reduce the capital required. We'll also continue to look for European infrastructure assets because they are also very capital efficient and provide us with the duration that we need. On our US balance sheet, our needs are somewhat shorter duration, the 3 to 5 years. So we see a lot of issuance in that space as well, which is different from if you'd asked me 10 years ago, most of the private placement market was 7 to 10 years. But in the last maybe 2 or 3 years, there's been a significant issuance in the 3 to 5 year buckets as well. So, which is very helpful for our US balance sheet.
Yeah, absolutely. So then tell me about the challenges that you foresee this upcoming year. A lot of people have been really positive, but there's things to keep an eye on.
I think, what we saw last year was, again, maybe the last quarter, there was a lot of deal flow and people were kind of full in terms of their allocations to this asset class. So we saw, from our perspective, really attractive spreads and good structures and good allocations. And as we start the year, it's typically January, February, March, Q1. Everybody has big budgets. Spreads get squeezed, and the allocations are not where we want them to be. But I'm hoping that this year will be a little bit different because we do expect this year to be record issuance beating last year in terms of there's a lot of data center, digital infrastructure transactions that, people need billions and billions of dollars on that. So which should be good for us in terms of deal flow and also to get good allocations and from a spread perspective, get better values. So it didn't answer your question on challenges, but I'm being optimistic. It's January, so I think it'll be a good year.
Amazing. So tell me more about the allocation strategy then. How is that changing with the new asset classes coming into play and what you're interested in?
It is evolving. Given the overall yields that we are able to generate on traditional private placements, they're relatively low. And we are facing competition on our sort of broad business on the liability side from a lot of asset managers who now own insurance companies, who are able to source assets at higher spread than the traditional private placements. So we are obviously cognizant of what's going on in the market, and we are looking at structures which are somewhat different from what we have done in the past, but do provide value. And it's early days for us, but I think we will have more allocation to those assets. We're still going to be an investment grade player from our risk appetite corporately and also from capital requirements. We expect, it below investment grade is not capital efficient. And our team is also geared more towards buying investment grade assets. And we'll occasionally dabble into below investment grade, but we feel having third-party managers do that for us is a better execution.
Yeah, absolutely. And you have to account for risks, and especially in a volatile market.
Also, the work intensity, they tend to be shorter term. They tend to have a lot of maintenance requirements. And so it's not a very efficient allocation of our time and resources to chase those assets. We will do them if we have relationships with the sponsors in some cases. and we like the asset class and we know the asset, but we don't go around looking for those assets for our team. We do have an allocation to what people call sub IG, high yield, private credit type asset classes, but they are kind of done outside of our team.
Right. Gaurav, thank you so much for sharing your
Thank you
insights.
so much.